morning. Welcome to the XM.com weekly market update. And with me again is Peter McGuire, the CEO of XM. Good morning, Peter.
Good morning, Andrew.
We'll jump straight over to Europe. Plenty of activity there. Very flat, the markets there, or sort of from a GDP perspective.
Absolutely.
We're seeing, you'd probably say we're seeing our pulse at the moment. And we've got some numbers out.
Oh, it's a weak one.
It's a weak one. We've got some numbers out of Germany, France and Italy this week around GDP, etc.
Yeah.
That is all sitting around zero, basically, give or take a small margin either side. But we think is the worst behind them.
Well, you would hope so. I mean, you've got to look at that flat line that you saw October, November, December, with the last quarter was really pretty much zero. And then you've had a blip to the upside, about up 0.2 something percent for that first quarter, January, February, March. So I hope that you are right. And if you're looking at the composite PMIs, the yellow, the gold or the yellow, they've certainly ticked well up since Christmas. And let's hope that what we saw at the latter part of 23 is long gone and we see blue sky ahead.
Yeah, for sure. One chart which is not great is the consumer confidence. Now, this is a 2-year chart.
Yeah.
And
I'm sorry to tell you, but zero's at the top.
Yes. But ironically, it's improving.
Yes, it is.
Just.
Well, we had a little bit of a giggle. We're not laughing in the sense of the Eurozone. I mean, it's just when you look at that chart, you get some sort of indication what we've experienced in the last couple of years. And it's been very, very bleak and anemic growth to the point of, really under some pressure from a confidence perspective. And that truly, post-COVID, hasn't, whilst it is getting better, you haven't seen, that big boom or turnaround. And so let's see how it ambles along for the rest of 24 and if the ECB look at rate cuts in the next matter of months.
You would think.
Before the Fed.
Yeah, you would think that's probably a certainty at this stage.
You would hope so.
Speaking of the euro, still under pressure though, hovering around that 107 mark.
Yeah, it's languished, hasn't it? A lot. It's been choppy, but it's been a good trade if you're looking at it not over the last, this month, but over the last couple of months. It's certainly offered plenty of opportunity, and it's had highs there. Have you seen 110.50, 110.50 to nearly 111? So yeah, I sit there. We've had very strong US dollar. It's sitting just under 106 for that US dollar index. So again, there's a trade there. You've just got to be, watch the screens and don't take your eye off the screen.
Yeah, but a lot of these currencies are under pressure purely on the back of the
strong US dollar
and the interest rate market in the States.
That's it.
Speaking of the US, CPI, PCE, we've talked about it quite a bit, still reasonably strong, which is not necessarily a bad thing because it indicates a strong economy, which is great. But will the equity market come under pressure? But once again, it is solid at the moment. It's probably not as hot as what it was, but there has been a bit of volatility in that equity market over the last month or so. But we're in earnings season at the moment, and a lot of these large cap companies, even outside the Magnificent Seven, are posting pretty reasonable results.
Yes, they are. There's no doubting that. Though we are seeing corporate downsizings, and we've got Friday as the non-farm payrolls coming out this Friday, so that'll be interesting. Where you shot the lights out last month at 30, I think it was 300 odd thousand, just over. But this month, their analysts are expecting just over 200. So jury's out. It's a hard thing to analyse and really get right. You can be out 80 or 100%. But I've got to agree with you, and I'm looking forward to Jay Powell, Fed Chair's comments tomorrow. That tells the story and the rhetoric, and naturally you look at every word, the phrase, and what it means as far as rate cuts or, just the overall confidence and market sentiment.
Reading between the lines, I suspect. So.
Yeah, you've got to.
Yeah. Speaking of earnings season, not all the Magnificent Seven. We've got obviously Amazon and Apple coming out this week, but last week Meta, Alphabet, and Microsoft. Outstanding results. Tesla, the results weren't good at all. No. But the commentary from Elon Musk, the market took that as a positive, and on the back of that, we've seen Tesla overnight rise about 14 or 15% after doing a deal in China.
That's right. Yeah, automated vehicles. So there's no doubt about him. I mean, they hang on every word. He's a brilliant strategist, and he's the front man. You buy the people. The product, but you'd certainly buy the people running the show. And He's delivered, Elon. You've got to give it to him. He's a go-getter.
Yeah, I think they'll be pretty happy with that Chinese deal as well, because they have been cutting the prices of Teslas, coming down, they're cutting staff, so their margins are shrinking in that car market with all the competition now coming in
from China.
Just from other manufacturers.
Well, it wouldn't be that hard. You haven't got that many moving parts in a car compared to a combustion engine. There's the first part. The second part is the batteries must be fairly generic. You know, you phone up, Bob, and you say, I'll have give me a couple of thousand batteries. They must be supplying. When you get to the pointy end of the stick, everyone must know everyone when it comes to the battery supplies, you would think.
Yeah, well, that's right. And a lot of them are coming out of Asia, out of Japan and Korea and China. So
exactly.
You only use so many manufacturers. Speaking of performance, this gives us a look at the Magnificent Seven year to date, as well as 1 year return, and 95% of that is outstanding.
That is mind-blowing. I mean, let's pull it apart. Year to date, 20% up for Alphabet is just mind-blowing for that first 4 months. And your year return just under 56. That's sharp. And Amazon, well, they beat them. Apple are yet to drop as far as numbers. Meta, they're at the top of the tree. Microsoft, very, very strong as well. But then you get to NVIDIA and you just go, what on earth is that? That's mind-blowing, Andrew.
It is. And, and you look at the 1 year returns, like other than Apple, you would sort of potentially look at Apple there saying, that's a buy, because they're not doing anything wrong.
Well, they've got a war chest of cash.
Yes. And I believe they've got a big conference in June, which they're anticipating some new launches and whatnot. So maybe the market is waiting for that.
And maybe share buyback.
Yeah, well, all of these companies do the share buyback other than Tesla.
Yep.
Tesla does. They're actually the opposite. Their share count just continually goes up and up and up, which is the downside of Tesla, where they continually dilute their shareholders. And a lot of those shares are going to Elon Musk.
Yep.
But all the others, earnings per share rising, continual share buybacks, the ones that do pay dividends, now Alphabet and Meta now pay a dividend. They haven't in the past. So does that put pressure on Amazon?
You would think so.
Issue a dividend. So it'll be interesting to see if they come out with that overnight, because...
Though I've got to say, it's 77% return for the year. Are you really desperate for a dividend?
Well, no. Well, dividend's a bonus.
Well, yeah, but I'm saying, if you didn't get a dividend, you're bad luck, Andrew. But what the stock price up? Oh, it's up 77%, Pete. Yeah. Put $1 million in, and I've now got nearly 1.8 million.
Yeah. Well, you've got to weigh up. Do you want a dividend, which is...
Well, you don't get as much capital growth.
Yeah, but there's a tax implication.
Exactly.
Or do you want they go and buy back a ton of shares?
Yes.
So the pie shrinks.
And your value...
Your value, or your part of ownership goes
increases.
Up, and you've done nothing.
Yes.
It doesn't cost you a cent.
Exactly.
So there can be an argument that share buybacks are actually better than a dividend. But a lot of these companies do both. So, and as you say...
And they're starting to ramp that up. So shareholders must be ecstatic.
And they've got so much cash that dividend is not an issue.
I just look at NVIDIA. I'm dumbstruck. I cannot believe those numbers. I didn't realise it was that brutal.
Yeah, I know.
And you're 4 months in.
And
there's every chance, Andrew, that that NVIDIA, with the sort of traction it's got, could take out that 1 year return.
Yeah. I think NVIDIA in the last 2 weeks is down about 10 or 15.
Yeah. So, giving up a bit of hot air.
Yeah, I know. Incredible. Finally, just a chart on AI and the sectors that potentially will be impacted. IT and finance are pretty the obvious ones, but you've got like 6 of those sectors. They're sort of saying more than 50% of that will be affected by AI, which, seeing the direction that AI is heading in at the moment, not surprising.
No, I mean, I find that hard to comment on because there are so many moving parts to that. As far as, if you look at IT, they're highly skilled. Finance, majority reasonably to highly skilled. Customer sales, they've got core competencies that are unique because they're driving revenue. Operations, that's the grunt of any business. That's the manpower, woman power. HR, okay. Marketing, wow, 56%. Legal, I've always heard that, the lawyers will be redundant. And that's just mind blowing.
Yeah, and I think what a lot of people underestimate is AI is still in its infancy.
Yes.
We haven't really even touched the surface. I know there's a lot of discussion about it and what these big tech
Imagine
firms
15
are doing.
years' time.
Well, yeah, or 15, imagine 5 years' time. So, and I think a lot of the companies are still coming to terms with how AI is actually going to work.
To be benefit within their business.
Yeah,
That's
so
right.
I think there's a lot of...
Well, you've got to be a strategist and you've got to employ intelligence externally to look into your business and say, where's our pathway? Because if you haven't got that brain's trust internally, which most companies haven't because they haven't delved in it, then they're sitting there blindfolded going, what's going on? And they can get leapfrogged through innovation of other companies, and they're made to be just settling in the dust, and you haven't got a company in 3 years.
Yeah, and I think that's where some of these consultancy firms will come into play as well, like your Accentures and your KPMGs, etc., to help guide these companies
100%
down that path.
You've got to.
But yeah, it's...
I don't see many bricklayers there.
No.
Plumbers, electricians.
Yeah, if you're a trade, you're
nurse.
A tradie, you're probably safe.
Yep. Medical. They aren't.
No. So interesting times ahead. All right, Pete. Plenty of data out later this week, so we'll keep an eye on that.
Yeah, big week or big couple of days. I'm looking forward to it. Look, gold's off the best part of $80. Oil's given back a little bit of the hot air. Currencies are really whipsawing. So, and Andrew, the equity markets, they were up a little bit. I think they were up 0.3% across the board. When they say it's a Dow, S&P, and Nasdaq, or 0.35 or so. So yeah, let's we march on to the weekend of course with NFP.
That's right. We'll keep an eye on things and catch up again next week.
See you, man.
Thanks, Pete. And that's the XM.com weekly market update.